The dollar versus Canada has been trading volatile up and down price action over the last few days. Not surprisingly, tariff news continues to dominate the currency pair with on again, off again tariff news from both the U.S. and Canada impacting the pair. Today we have the Bank of Canada issued its decision, which they're expected to cut rates by 25 basis points. What will that do to the price of the dollar versus Canada? I don't know, but I'll talk about the technicals that are driving this currency pair and what levels you should watch for into that rate decision. So let's get started. Looking at this pair, I'll draw my red box around where the price action was trading up and down, up and down, up and down here. And all these spikes, both to the upside and downside, were impacted from tariff news. So if there was a new U.S. tariffs, we saw a big, huge spike here. We saw it here. We saw it here trading yesterday, and then they took it away, and we started to see rotation back to the downside. Down here, things were becoming a little bit more sane as far as or at least more calm in regard to tariffs. So we moved outside of this red box here through here, but then moved back above it, and we had one last gasp right here in trading last week to the downside before rotating back to the upside, basing against the low of this red box in the low swing area right here before moving to the upside. As I mentioned, trading yesterday, we did extend above this high right here off of the 50% tariffs on steel and aluminum and cars and all of those stuff that pushed the price higher, but then things got calmed down with the Canada electricity surcharges being taken back and then sent the pair down. But in trading here today, we are seeing additional moves to the upside as Trump said 25% steel and aluminum tariffs would still go into effect, and that helped to push the price above this the swing area through here, but that then rotated back to the downside. So where do we stand now? Well, we moved back down near the 100 and 200 hour moving averages. That's the blue and green lines in this chart right here, and that is probably good news as the market moves toward a more neutral area ahead of the interest rate decision. Once again, the central bank is expected to cut by 25 basis points. So with the price trading right in between the 100 and 200 hour moving average at the moment, those moving averages will become the barometers for more bullish above, more bearish below. If the central bank cuts rates and the price starts to move higher as a result, which you normally expect, but you never know, then we could see a rotation back toward the high of the swing area, high of this red box, toward the 144.48 to 148.44.71 level. Get above that level and stay above that level is more bullish for the pair, more bearish for the Canadian dollar. And we'd look toward the high price that we saw in trading last week near the 145.41 level. Conversely, if we do see, buy the rumor, sell the fact, or I don't know, some helpful news on tariffs, then we could see the dollar Canada continue its move to the downside below and away from the 100 hour moving average, a 50% retracement of the move up from the February low to the February high would be the next target at 143.45. And if we start to move below that level, then we can't rule out the fact that we could head back toward the low of this swing area. If I were to survey people, my guess was that they wouldn't be expecting that type of move where the Canadian dollar gets stronger versus the U.S. dollar. But we just saw U.S. CPI come in weaker than expectation, so who knows? But nevertheless, watch these two moving averages as your key barometers for trading here today. It will give you the clues for trading. And by the way, all this is dependent on quiet tariff news. We'll never know what that's going to be, will we? So be aware of that volatility from that standpoint. But that tends to keep the pair more supportive rather than less supportive. Let's just say that. My name is Greg McGlosky. Good fortune to trading. Bye-bye now.